Hello, good day, everybody. My name is Andrea Reynolds, and I am the CEO and founder of Swoop. And I'm delighted to be taking part in the EIS Association webinar today. So, just a bit of brief history on Swoop, who we are. We are a platform for businesses, small and medium businesses who are looking to either source money or save money. And so you can integrate your different data sources, your cloud accounting, online banking. We take information from Companies House to essentially help you compress gathering your information when you're going to funding providers. And then what we do is match you against the eligibility of those funders and help you get the access that you need to the funding. And with that in mind, I'm here today to talk about the various government schemes that are available as a result of COVID-19 and to help you navigate all the various announcements that were made. So just in terms of what those key principal announcements were, the first was the 330 billion that was set aside for lending to small and medium businesses during COVID-19. And those relate to everything from C-bills through to bounce back loans. And I'll be digging in a bit further in terms of the key points that you need to know about these products and the eligibility, etc., in the next slides. The second part is in relation to grants, and I'll start with what are known as the small business rate relief grants. And so they are distributed by the local authorities. So if you are a business that has been paying small business rates under between 15,000 and 50,000, then you are most likely eligible for one of these grants. If you're in retail, hospitality or leisure, then you will be entitled to £25,000 grant. And if you're not in one of those sectors, but you are paying business rates under the ranges that I mentioned, then you would be entitled to a £10,000 grant. So as I say, local authorities are distributing them. If you haven't heard from them, most of them have been proactive, but if you haven't heard from them, then get in touch and find out about applying for that grant. Apart from the local authority grants, there's also was an announcement made and distribution is now happening of two other schemes. One relates to Innovate UK, where they are distributing grants, first of all, to their portfolio that they already have. So if you've received in the past a grant or a loan from Innovate UK under one of their normal competitions, like the SMART competitions, then you can apply for a continuity grant. The amounts being distributed are on average 175,000, and Innovate UK are looking to, first of all, look after their 2,500 businesses that they have in their portfolio. And then after that, they are opening it up to new applicants. So even if you haven't had funding from Innovate UK before, you may get it under this scheme. And then the last scheme relates to equity investment. It relates to what's called the Future Fund. And we'll speak a little bit more about that. But essentially, this was brought in as, I suppose, a direct result of the innovation businesses and high growth businesses reacting to the fact that the other schemes didn't really fit into their needs in terms of surviving the lockdown period. Over and above these schemes, there are a few other things to mention that you may not be aware of that could possibly improve your cash flow. Job retention scheme being the obvious one. I'm not going to dwell on that because we're all receiving multiple notifications from HMRC with regards to the job retention scheme. So I think we're fairly well covered on that. The other ones, in case they passed you by or you've missed or you haven't heard about, is if you had a VAT bill that is due or was due for the period to March or thereafter, then there is what's known as the VAT deferral scheme. Again, HMRC has been very good at contacting people about that and automatically deferring the bill to April 2021. And over and above that, if you have other taxes that are due and you're struggling to meet those payments and they're significantly impacting your cash flow, then the one to look for is there's a helpline that you can call where you can ask for a time to pay or payment deferral scheme. And HMRC has been very good at actually working with businesses on that. But going back to CBILS and bounce back and the other schemes, you have to be 12 months minimum trading for CBILS, 50% of your revenues coming from trading activity, so not rental income or investment income. Majority of sectors are eligible, so there's a very, very minor group that I don't think any businesses really fall into, that may not be eligible. In terms of how do you go about getting a CBILS, there's the rules are based around affordability and viability. And the viability rule is probably the key one to look at. If you look at your balance sheet up to December 2019 and look at your accumulated losses, if you have losses, if you're a high growth business, you probably do, like us. If you have accumulated losses that are 2 times your share capital, including your share premium, then they consider that not to be a viable business. So just looking at that, even as a key indicator, is a good way for you to determine your eligibility. In terms of what they're looking at in terms of can you afford the loan facility, what they're looking at is what cash did you have available up to March, so pre-COVID, how was your business operating and could the cash cover that? In terms of the maximum amount that you can raise under it, it's 2 times your average annual wage bill or 25% of turnover. There are numerous products that fall under CBILS. It's not just term loans. You can go for asset finance, invoice finance, or term loans. No arrangement fees, no interest rate for the first 12 months. And thereafter that, the interest rates being offered are fairly market leading rates, depending on your credit risk profile. So don't worry about extortionate interest rates. No personal guarantees up to £250,000. If you're looking for more than that, then the personal guarantee will only be on 20% of the excess over £250,000. Now, the application requirements in CBILS is significantly more in depth than it is for bounce back. You need a 12-month cash flow forecast setting out how you're going to survive with the loan that you're receiving based on your fixed outgoings that you have. They're looking for your year-to-date management accounts and your previous year's full filed accounts. And over and above that, they're looking for 3 to 6 month bank statements and an impact statement on COVID. And so that's the general rules around CBILS. The CBILS program is now moving at a good pace, and we're getting turnarounds of 3 to 5 days for our businesses in terms of getting them the CBILS into their bank account. Bounce back loans, as I mentioned, in terms of an application requirement, significantly less. You simply have to answer 7 questions and self-certify your information as opposed to provide lots of detailed evidence to the banks. The one thing I would say about bounce backs is because they are perceived to be easier to get and therefore quicker turnaround, in some banks there are severe delays in some of the primary banks. It also, in some of the new challenger banks who've recently got approved, we're also seeing significant delays. So if you're on that sort of 50,000 route in terms of looking for finance, you might want to consider a CBILS, because we are getting those ones processed much faster than bounce back now. In addition, bounce back might not be enough to see you through your recovery, as well as putting the fires out during lockdown. So it's important to know that there are now providers that will also look at extending further finance to you. So if you manage to get a bounce back, you might think that's the only way now that you've dealt with all the government schemes in terms of loan schemes. You can now go to a provider and also get a CBIL in addition to your bounce back, as long as you have the affordability there. In terms of the bounce back, it's 2.5% interest rate once the interest rate free period is over for the government covering that, and there's no early repayment charges. On both schemes, it's important to say that the government is guaranteeing these loans. For CBILS, it's up to 80%, and for bounce back, it's up to 100%. So this is enabling the lenders to be able to get out and actually provide liquidity. in terms of other schemes, as I mentioned, the Innovate UK grant scheme, which I talked about in some detail. And then the other one is obviously the Future Fund, which is essentially where a business is, you manage to find an investor who can come in for part of the round, and you may not have the full round, and the investor can apply for a future fund. And so what it is a convertible loan note, and so the government is essentially putting a loan into your business, and then that will convert into equity at your next round, and it is at a discount of 20%. So already there's been so much demand for the Future Fund that the government is now talking about reviewing this and looking at expanding it out further and extending the deadline for September, because there has been quite a lot of applications. So that's one that we will be watching over the course of the next month. Over and above these schemes, key to mention also, Innovate UK has been launching very fast track competitions where normally it would take them quite a few months. But anything in relation to COVID-19, they're releasing competitions where you can apply and you get your answer on whether you were successful or not within 3 weeks or so. So if you have something that you think will improve society or community during COVID or as a result of COVID, then look out for those competitions. You can register with Innovate UK and you'll get notifications that are relevant to you. If over and above all of these schemes, you're still not feeling like you're eligible for any of them, then if your business is 2 years or younger, you are still eligible for a startup loan, which is one of the faster ways to get funding into your business. And so it could be because maybe you're pre-revenue. Startup loans are also government-backed loans. You can raise up to £25,000 per promoter in the business. So if you have 2 founders, that's £50,000. You can have a capital repayment holiday for 6 months to help you get your business off the ground. And then in addition to that, if you start making your repayments after 3 months, you can apply for what's known as a second loan, which is another top up of the startup loan. So those are schemes that are out there. In terms of how do you apply, you can come on Swoop and we can identify the right funding options for you, or have a read of all the different schemes that are out there and decide what's best for you. If you come to Swoop, you can integrate all your data and then we'll curate the list for you, help you get your documentation together. If you're going direct and not via Swoop, then I would suggest that you focus on your cash flow forecast, because that's important to any of the lenders to see how you're going to be able to survive. And then you can submit your application to Swoop, where we manage the application process for you, or go directly to your bank or some of the alternative lenders. So that was a very quick whistle-stop tour of the government measures that are out there. I look forward to speaking about them in more detail with the panel. Thank you very much.